Insert housing market clickbait here. Houses at 50% off. It's going to crash yet again for the 16th time in the past 2 to 3 years. Of course, it's easier to generate views and get lots of comments on a video that says the housing market is going to crash. But I applaud you for actually tuning in to look at real data and see what's going on in the housing market. And the comments below will come from real buyers and real sellers in the Southern California housing market. Hey there, Christian Walsh, real estate agent with Wire Associates. We have been helping real buyers and sellers make the best data-driven decisions in this crazy market. And it's time for the Southern California Housing Market Report. So if you're ready to dive into way too much data for LA, Orange County, Riverside, San Diego, San Bernardino, and Ventura counties, hit that like button and let's get started. Let's dive into real numbers. You draw your own judgments. I'm going to show you some numbers and give you my thoughts on what we're seeing. But at the end of the day, let me know in the comments below what you are seeing out there and what you're seeing in these numbers. Starting with Orange County single family homes for the first 2 weeks in May, going back to 2018, normal markets, 2018, 2019, 2020, not normal, coming out of COVID. At this point in time, you can see the sales, the yellow line, that's down because we had fewer pending sales in the months before due to COVID. But you can see that things rallied through 2021, and now here we are in 2023. What do you see when you see those numbers that close together? And our email newsletter subscribers get these numbers so you can see. You can see we're at record low new listings. Inventory is down. Demand is at a record low as well. We have fewer properties going under contract than we do, even fewer than 2020 at this time. But we can see there's a twist. Every property that was newly listed theoretically has gone into escrow. This is a challenging market for buyers because we have so little inventory and we still have demand. And this is with interest rates in the sixes. If interest rates continue to drop and get into the fives, the high fives, mid fives, it's going to be even more of a fight. There's going to be even more demand. So that's what we're seeing in the numbers for Orange County. Let's see if it continues through the respective counties. We can see inventory is down for Los Angeles. Now I expect this to go up as more landlords bring their properties to the market. We're talking to a bunch of landlords right now who are doing what they need to do to get their properties positioned to sell with tenants in it, or they're going to get the tenants out. And there's a special process. It's going to take them a minimum of 90 days-ish to deliver proper notice and then get the tenants out. And then they have to do a substantial remodel. We're helping landlords do this right now and helping tenants realize their rights for this. So looking at that, we do expect inventory to increase, but we have high levels of demand. That gap between the new listings and pending sales is at a record low if we look back in the years past. The other thing to note, when we see the number of sold properties below the number of properties under contract, that means in the coming months that we're going to see sales increase. When it's flipped, which we'll see in one county, that means that sales, the total closed sales they're going to decrease. Moving into Riverside, look at the dramatic drop in inventory, and there is a drop in the number of pending sales, but it's not a huge drop off. But those numbers are crazy close together. So this is a case, if you are a real buyer out there in Riverside, let us know in the comments below what you're seeing. But at certain price points, because this includes all price points, at certain price points, it is an absolute feeding frenzy, buyers fighting multiple offers. And then there's some price points, like the highest ones, where maybe there just aren't that many offers. We're going to show you in the Altos research reports where we can get a hint at how things look at the different price points. San Bernardino got that big drop in inventory, record low inventory, but we have pending sales that are close by. So another market where it's hot, and this market has thawed out, and I mean that literally, not metaphorically. It has now passed the crazy winter months in San Bernardino. They were buried under snow and there weren't many deals happening, but now we're past that and it is a spring thaw season. Moving into Ventura. So Ventura is the market that is different from all the others. Fewest number of properties in Ventura as compared to the other counties we're covering. And we can see that the number of listings is low, and we can see that the number of properties going under contract is low. This is a case where there are more properties that sold in the first 2 weeks and went under contract in the first 2 weeks. So we will continue to see the number of sold properties drop in Ventura in the future based on these statistics. And we'll have to see what that means for inventory levels. The Altos research reports will show us if inventory starts to increase and we have these low demand numbers, that could mean that there will be price adjustments in Ventura. Does that automatically mean all of Southern California? No. All real estate is local, and we're going to look at one market for Bruce. Bruce, you asked to compare different parts of Orange County. We're going to do that for you. Going to show you how numbers can vary within a county. And here we are, San Diego, crazy hot market. It was before, it had been a crazy hot market, and then it cooled off slightly this year at the beginning of the year, and it has since rallied back. And we see that the number of new listings and pending sales are close together. Crazy seller's market in San Diego. But don't take my word for it. What are you seeing? Tell me below. And don't forget that we are real estate agents for real buyers and real sellers. So if you're thinking of making a change anywhere in Southern California, we have a sales and marketing regional center in LA and Orange County, and we can help you anywhere in Southern California. No pressure, no obligation, reach out. Moving into the multifamily numbers, one of the only places you are going to get these numbers for Southern California. And we're seeing the effects of higher interest rates on multifamily. It's tougher for properties to pencil. The cash flow that's left over after paying the higher debt service, if acquiring a property, is making it more difficult for properties to pencil. And for commercial financing, similar thing, you're gonna have to put a larger down payment than you would have in years past in order to cover the debt service coverage ratio. Moving into the numbers, if that didn't make sense, reach out and I'll explain. Maybe I'll do a live on that at some point in time. Let me know if you want that. So here we can see that inventory is down for Orange County, but the demand is down as well. It is not as low as it was during COVID, but pretty darn close. So we can see this is the effect of interest rates on the multifamily market. Fewer investors are putting their properties on the market, but there are also fewer folks out there buying. So the gap we're seeing between the number of properties under contract and number of new listings has remained wide. It is not like we were seeing with single family where those numbers are close together. So Los Angeles is a market where we, just as in single family, we expect to see more properties hit the market in LA, with one caveat: the Measure ULA, the mansion tax, that hits more expensive properties in LA City. And quite a bit of the multifamily properties are going to be the 5 million and above. So we do expect people to hold off on listing the more expensive properties, but the less expensive, smaller RSO properties, we're seeing potentially more of those hitting the market. In fact, I have several of those listings coming. If you have an RSO building and you want to get out of LA and take your money to some of these other counties, reach out and we can help you do that. Riverside, the market there has absolutely plummeted. Only 4 properties going under contract. This is the lowest demand we've seen in Riverside, which tends to be a more popular market. These properties tend to trade at a slightly higher cap rate so that it's a better deal for an investor who's acquiring. But we're seeing demand is way down. So this gap between pending sales and new listings is one of the widest we've seen. We'll have to keep tracking that to see what's going on in Riverside. San Bernardino, as mentioned in single family, thawed out, and I don't mean metaphorically. The snow is melting, and we should start to see more deals, but we're seeing demand is down in San Bernardino, and one of the largest gaps we've seen between the number of new listings and pending sales. So like Riverside, a market where we'd expect to see sales trading because it tends to be a higher cap rate market, good for investors at a higher cap rate who are acquiring. But we're seeing things slowing from a demand standpoint. So again, we'll have to keep tracking this to see where this goes. Ventura is always all over the place. Not much you can tell here. Demand is definitely down in Ventura. Listings, pretty consistent other than 2020 when it went through the roof. The numbers are always all over the place. I just don't want Ventura to feel left out, so I do cover it for multifamily. In San Diego, we can see another market where demand is pretty soft. Supply is down, but that gap between new listings and pending sales is certainly wide, one of the wider ones. So interest rates certainly taking a toll on the multifamily market. We'll have to see interest rates drop. pretty significantly in order to get back to a point where things will pencil better for multifamily properties. I'm doing it. I can't stop myself. I'm covering way more data than I probably should in one video. Should have chopped it up, but I get excited about these numbers, and I know you do too, looking at median home prices, and I hinted at this in the live I did. So there's a couple of important things to look at here for the respective counties. It's important to look at the month over month trend. Does the number go up month over month, or does it drop? Now, what's interesting, in Orange County, we saw that it dropped month over month. That is atypical for this time of year. Last year, things peaked around April and May and turned, and that was earlier than normal. Usually they don't turn until the summer, midsummer, or a little later. So last year was atypical. For Orange County, this is atypical. We do see for Riverside and LA that month over month it's gone up. Now, year over year, we can see that numbers are down. Orange County is down 10.4%, LA 7.8%, and Riverside 3.8%. And this number changes depending on the data we include. We consistently include single family condos and townhomes. If we just take a look at single family, for instance, we see, number one, that the median home price in Orange County is still down month over month, but it's at 1.2, which is a big number. That's only down 7.7%. But let's, to be consistent, because this is how we've been covering it, we include single family condos, townhomes. So that's a big deal. Numbers are down 10.4% in Orange County, and that's from the peak. So last year, like I talked about, we peaked early. And these are going to be the biggest year over year changes in my predictions for what's going to happen. Because we peaked so much in Orange County, I knew that these numbers for April were going to be ugly. Going into May, June, and July, as long as the month over month doesn't continue to trend down for Orange County, the percentage will start to get better for year over year. And we can see, again, LA and Riverside, those are trending up. One more important thing, and I should do a video on it, and I will if you'd like. Let me know in the comments below. You're hearing from the Crash Bros how everybody who purchased is upside down. If you purchased in 2022, you're upside down. Well, number one, if you're upside down, it doesn't automatically mean you're going to lose your home. If you can still afford your payments, you continue to make your payments. Nobody ever wants to be upside down. It's not a fun thing. But guess what? It happens every year. If you look at the cycle for the median home price, it always is up in the summer and drops through the end of the year. That is the trend. So literally everybody, every year who buys at the peak and midsummer, they're upside down. So I think it's important to note that. Another important thing you can go ahead and do is you can look at the exact months where the median home price was lower, and you could say, okay, people in certain months are upside down. So using Orange County as an example, it's 980 based on having single family condos and townhomes. So if you bought last month, you're upside down a little bit. But if you bought in February or any time before then until September, you're not upside down. It's September through last January-ish where you're upside down. So it's not the entire year. It's not dramatic for some of those folks there. And again, it doesn't necessarily mean these are people who are going to lose their homes. So that's an important point. Make sure you understand that every year since homes were purchased, every year people are upside down based on the median home price. If they buy in the summer, the prices drop through the holidays. And checking the median home price for the other three counties, we can see that everybody is up month over month except for San Bernardino. So Orange County and San Bernardino are down month over month. We'll have to see what happens, see if that trend reverses itself. And then year over year, people are down. So San Bernardino, 6%, Ventura, 8.6%, San Diego, 4.1% down year over year. But these were the peaks. We are looking at the absolute peak. Interest rates started to go up and crush the market. So the median home price started to drop. So we could be at a point where we're positive year over year in San Diego by next month. That's how quickly things change. Now you'll be off a little bit from the peak, but that could be erased at some point in time too, especially if we get interest rates down to the 5%. then we could see prices continue to go up as long as inventory stays down. Moving into the Altos research reports, I don't want you to miss these numbers. Hopefully you're still there with me. We're going to cover the counties and then one city within Orange County to show you some of the differences. We're going to do this fast. Make sure you subscribe for your Altos research report for your county and your city, of course. So starting out with Orange County, we can see that the market action index, it is a strong seller's market. And is that what you're seeing out there? You tell me. I don't want to put words in your mouth. Looking at inventory, we can see inventory was down and it was lower than it was in the crazy year of 2021. In fact, this is one of the lowest it's been. And the other important thing to look at is here in the market segments, we look at new inventory versus absorbed inventory. The absorbed inventory in every case in Orange County, we can see that more properties were absorbed than new listings, except for the second quartile. It's 101 versus 98, still very close numbers. Days on market for the two bottom quartiles in Orange County, 14 days. That's what I'm talking about, where different price points are going to have different looks in the market. The top quartile, the highest price points, it's taken 2 months to sell. So depending on where you're looking and what you're tracking, you're going to see very different markets. This is for you, Bruce, moving into Buena Park. I wasn't able to compare North OC versus South OC because it's tough to figure out where exactly to stop the North and the South, but I figured it'd be helpful to look at least one city. So you can see that from a market action and index standpoint, that Buena Park is actually much more solid, much quicker moving than Orange County in general. There's much less inventory as well. You can see that the inventory is at a record low in Buena Park. And what does this mean for the different market segments? Well, if you are in the lowest price points, it's at 0 days on market. Things are moving quickly. Now you can see that the absorbed versus new inventory, we don't have huge numbers, so it's not as easy to tell exactly what's going on. But the highest price point in Buena Park, if you're there, it could take 98 days to sell. But if you're in the lower two quartiles, it is moving like hotcakes, sold in 0 days. So that is the difference. While you can look at county numbers, I encourage you to look at your local city numbers. Moving into Los Angeles, it is a strong seller's market. Inventory is down. It's flattened out a little bit, less than we had back in the crazy times of 2021. And we can see that in general, the inventory is being sucked up in LA County, except for that second quartile, another one where that isn't moving as quickly, but still 286 versus 277, pretty close. That quartile is moving the fastest of all of the price segments as well, even though they're not being absorbed as quickly. So it's helpful to look at these price points and see if you're at the top, you're sitting for a while. If you're at the bottom, not a big surprise, you're moving more quickly. Riverside, in every case, you're seeing that the market action index is becoming more of a seller's market, which isn't unexpected this time of year. We're still in the buyer season for real estate, and inventory is up a little bit as compared to the crazier times, but we can still see that things are moving quickly, and at all price points in Riverside, more inventory was absorbed than new inventory was brought to the market. So we can expect that these days on market times are going to reduce if this trend continues. San Bernardino, we have a strong seller's market. Inventory is still low, not record low, but you can see new versus absorbed. This is a hot market, and we expect these days on market times to decrease. Interesting here at the bottom of price point, the bottom quartile, we have 63 days on market. So this is a market where the lowest price point was taking the longest, but now it looks like it's picking up. Perhaps this was a relic due to the weather there that was slowing down sales, but it is definitely picking up, and we expect that 63 days on market for the lowest quartile to go ahead and decrease. Ventura, another one where it's become a slightly stronger seller's market. Inventory is low, but we saw there demand is low as well. And you can see that the number of properties that were absorbed, everyone except for that third quartile, is stronger than the number of new properties that have come to the market. And we can see here that at that bottom price point that things are moving quickly. Only 2 weeks on market top price point is going to take you longer. And finally, San Diego Market Action Index, one of the strongest in Southern California. This was at 100 before, and it looks like we're getting back there quickly. And inventory is down. It's lower than it was in the crazy days. This is the lowest level of inventory. This is one where inventory that's absorbed is dramatically more than the number of new listings. So we can see the lowest quartiles are 2 weeks on market. All of these numbers are going to drop based on the amount of properties that are absorbed. And again, the interest rates are heading down, so this could get even more overheated. Please be sure to put a comment below on what you're seeing out in the housing market. We want honest opinions on where you think the market's headed. Subscribe to the Altos research reports so you know exactly the statistics in your city or zip code, and you'll be automatically subscribed to our free weekly email newsletter and get updates like these sent every Sunday. And if you like these numbers, you're going to love this next video. Thanks for tuning in. This has been Christian Walsh, Forever Agent with Wire Associates, Berkshire Hathaway Home Services, and we want to hear from you.